but that ability once again to parlay it into areas outside of your lane is huge. Again, that nous to sacrifice some of the lifestyle inflation that some people succumb to in order to secure your future by investing broadly is huge. And markets very much are the same. There is a level of guaranteed unpredictability with what's coming, and your ability to be nimble, flexible, and when you recognize that you're on point to press that advantage very, very hard before the other side backfills that gap is crucial. Hey guys, welcome to this week's Money and Investing Show. This week we are looking at tips to invest like a pro athlete. What are the lessons we can learn from those that have achieved the absolute apex within sport and see how that applies into the world of investing? There's plenty to take away here. You don't need to be a sports fan. You don't need to be a sports jock. You need to be someone that's looking to achieve and learn lessons from those that have trodden the path before us. As always, make sure you take plenty of notes, but most importantly, make sure you take plenty of action. Hey guys, welcome to this week's Money and Investing Show with me, your host, Andrew Baxter, and as always, my offsider and co-host, Mitch Olarenshaw.
Good to be here, Mr. B. Now, you and I, we consider ourselves pretty sports heavy. We are in good shape and whatnot, but today we're going to talk about the actual pro athletes, the people we could quite never get to become, and talk about their investing journey, because there are a lot of successful professional athletes now turned very successful investors.
That's right. There's a high correlation, and just in case, as a caveat for the naysayers, well, if you earn that much money, of course you're going to be successful. There's also a litany of very, very highly paid sports stars that imploded financially. You know, Evander Holyfield, Mike Tyson, there's an NBA star at the moment that's in that situation too. So just earning the money doesn't necessarily mean it translates to a long-term fortune, that's for sure.
What do they always say? It's not about what you make, it's about what you get to keep.
100% true, and we'll look at some great case studies today of people that have earned a bit but have been able to explode that wealth through savvy business decisions, savvy investing decisions, and tapping in, I reckon, to the DNA that enabled them to become successful as an athlete in the first place.
Well, first thing that comes to mind would be Proper 12 from Conor McGregor. Now, if we look at Conor McGregor as a personality, he is constantly marketing both himself and anything else he has going on.
Look, absolutely true. I remember watching the movie that they had out, the notorious Conor McGregor, before he was a world champion, and watching his sort of rise into the ranks to, I remember UFC rented him a penthouse once before a fight, before he was a world champion, and they just couldn't believe it, and he's walking D-Devlin around going, look at this is unbelievable. So let's not lose sight of the fact that he went from being unemployed and to the dizzy heights of success there. And yes, he's certainly parlayed himself into business ventures like Proper 12, which is his whiskey brand, but also into Forged Irish Stout. He's got his pub, and I think the thing that he does better than anybody is his self-promotion. Which is insane in terms of someone that genuinely has come across social media and then been able to amplify everything they do. There's also a lot of his fitness products as well that have been pretty successful. So he's been, no question about it, a marketing machine. More successful, I would argue, in his business ventures really than in the octagon when you look at his more recent fight record. And I guess more than anything, that highlights a pivot point that smart people pick up on, and that's the fact that the money stops as an athlete at some point, whether that be through injury, the end of your career, a drop-off in performance, and then you have to ask yourself what comes next. And McGregor was great at creating next before it even needed to be there.
Now, for our listeners out there, AB, they may not have, likely won't have the profile that McGregor had, of course, naturally. But I guess it lends itself to utilising connections and referrals within business. What would you say to those listening?
Look, opportunities always come your way. Sometimes they're in really unusual wrapping paper, and sometimes you can miss them because of that. And that ability to network and be out there, if you're doing something that's of interest, people will approach you, and it's a question of being aware of that. What does that really mean? Can I help you with your business? I'm interested in a stake in it, and I'll take it to the next level. There's an opportunity to expand potentially on that, depending on what the deal looks like, of course. So, you've got to be aware of what's going on and not be frightened of pulling the trigger. And as I think human beings, one of the biggest traits that we have that can hold certain people back is that fear of being wrong, and therefore it's easier to make no decision than making a decision. And one thing that sports stars have going for them is that they are decisive, because that's what sport is those split-second intuitive decisions that you make, and some work and some don't.
Speaking of decisions, parlay that very well into my next person. That's Michael Jordan. A bit of a story on Michael Jordan. When they were prototyping one of the versions of Air Jordans, it wasn't ready for release yet, but he said, who I don't really care. I'm just going to wear them anyway. Wore them out on court, and then they blew up. And now we have Air Jordan, which is a massive collaboration with Nike.
Yeah, I mean, it's arguably one of the most iconic and biggest sporting deals. And what was the movie? The Netflix series Last Dance, I think.
Oh, that was a good one.
And when you look at the way he was within a team, I'm not a basketball fan. Obviously, I knew who Michael Jordan was. I knew he was pretty good, but I didn't understand just how much his DNA was about overachievement and how he dragged other people in the team along with that. To achieve in the octagon, as we've discussed with McGregor, as a solo sport, to do that in a team and drag the team with you requires a real force of nature, and I think that's definitely Michael Jordan. And you look at how he's parlayed that into multiple business ventures, not just with Nike, but also in terms of ownership of, I think it was the Spurs, I'm pretty sure he had some ownership stake in, which again you parlay off into the next deal, into the next one, and you become a rainmaker. And it's that ability to create that aura, which he certainly did in his playing career, of never being beaten, and has proved that he's been able to do that in the business arena too. And I think his net worth is now over a couple of billion as a consequence of that.
With Air Jordan, he was, to most people's surprise, heavily involved with the design and production and everything that went on behind the scenes.
Well, that's interesting, isn't it? Because it's quite easy, I guess, as a celebrity to park an endorsement on
That's
something.
right, yeah.
But when you actually take a more active involvement in it, it shows a longevity, I think, of what that business has the potential to be. And I don't know how long ago it is since Michael Jordan retired now, but it would have to be 25, 30 years, and he's involved now with Nike in that particular aspect of its branding than anything. And again, I think the decision there wasn't to be paid for an endorsement, which would be that short-term, I'll get a check, that's great, but instead take a stake in the upside, which if you back yourself is invariably the way to go. I guess as an employee, if you have a choice of being on a salary or being on a commission, if you back yourself, you'll take the commission to participate in the upside and miss the safety net. And again, that aggressive will to win and backing oneself, I think, is just one of the many, many, many reasons why Michael Jordan's been the success that he had. And that's the foresight to say, look, I don't want to be paid for this. I'll just take a piece of the upside. Exactly, in fact, what George Foreman, former twice oldest world heavyweight boxing champion, there is, when he did the deal on the George Foreman grill, it's like, don't pay me, I'll take a piece of the action, made $300-400 million from that, as opposed to the $100,000 they were offering him to endorse it.
Oprah Winfrey, much the same too, not an athlete, but similar situation, took the upside, not the salary. While we're on the basketball topic, AB, what about Shaquille O'Neal? Now, investing is our space, and Shaquille O'Neal claims to this day he bought Google in 1999, and it was the best investment he ever made.
Again, you've got a platform for a fairly short period of time as a professional athlete, and admittedly, you look at the income, particularly in the US sports, whether that be basketball, baseball, or gridiron, and the salaries for the top players are astronomical. But that ability, once again, to parlay it into areas outside of your lane is huge. And again, that nous to sacrifice some of the lifestyle inflation that some people succumb to in order to secure your future by investing broadly is huge. Great vision, and I'm sure he's been reaping the dividends on that ever since.
And there's more examples of some more even sophisticated layers of that too. Take, for example, Lance Armstrong or even Serena Williams, both of which own venture capital firms which do private equity. And that's getting towards the pointy end of investing, but can be done quite successfully, as they've proven.
Indeed, parlaying the attributes, and I guess in the case of Lance Armstrong, it's a controversial one insofar as obviously there were the drug issues, but to be able to rebrand yourself and do that, and look, there were a lot of sports personalities that have made it to a very, very high level of success in the investing community. You think about, say, Nick Farr-Jones, the former Wallabies captain, David Kirk, the All Blacks captain, both of whom have been CEOs in major listed companies. To Phil Kearns in the investment space. So a lot of people have done that, and even back in my day, in the days of amateurism or shamateurism as it was, if you were a half decent rugby player and you were at Harlequins, you could get yourself a job as a bond trader in the city fairly easily because of some of the sponsorship. But that understanding of world-class basics, and we'll get on to what sorts these people out in terms of where they stand out from the crowd is key. Another one is David Beckham, who...
Oh, Becks, the Rooster.
And again, great series on Netflix, understanding some of the idiosyncrasies. And I think David Beckham and Victoria Beckham, Yeah, they copped it. I remember like the British media, and I think it was the Sun, referred to them as thick and thin, as the British tabloids tend to have nicknames for people. I don't think it's too thick when you look at what he's actually done in terms of parlaying out into the David Beckham sporting academies, which I guess is a simpler leapfrog than setting up a venture capital firm. But that emphasis on branding and that will to succeed, and also in his case, of course, he also owned a large chunk of a sporting franchise, which is arguably one of the better ways of making money in the US too. So, very, very, very smart at maintaining branding and then being able to parlay that into, in his case, more related fields, but doing so with immense success. So I'm really pleased to see that, because I remember seeing him a few times score some ripping goals for Manchester United.
I can only imagine. They're all smart people, and the fact that they've gone out on a limb and they've started their own thing or invested, is a big difference. So if we talk about the qualities of these athletes, AB, and I guess sports as a metaphor for markets, if I can couch it that way, sports is very unpredictable. The canvas is always shifting. So too is the investing landscape.
That's right. The only thing you can control is you and what you do. So, in the sport example, you have a game plan. And if that game plan's not working, it's how quickly you can recognize it's not working and then pivot, change it, and get it into good order so it brings you home with the win, or it sort of stymies the problem if you're on the wrong end of a real hiding. So it's the ability to recognize what's working and what's not, and be able to commit to a different plan very, very quickly. And that word commit, I think, is key, because if you're in a sport where you're opposed to somebody, rather than the clock, for example, you don't know what that other side is going to come back at you with. They've obviously been practicing in just the way you have to try and undo your secret sauce and win. And markets very much are the same. There is a level of guaranteed unpredictability with what's coming, and your ability to be nimble, flexible, and when you recognise that you're on point, to press that advantage very, very hard before the other side backfills that gap is crucial. So there's most certainly a big overlap there. And if you're a one-trick pony, you kind of get washed up in the mess with it, and it doesn't work out for you.
So we look at athletes when they get to a certain age, or they get injured, they change teams, change teammates, whatever it is, and the ability for them to adapt and be nimble and therefore achieve the success that they have is very impressive. The same is true when trading markets, because we're always subject to different conditions. What would you suggest for our listeners out there in that situation if we draw on those metaphors?
No, I think firstly you've got to be market fit. You've got to maintain that fitness, and it's not in the gym or on the treadmill. It's specifically understanding where the market is and why it's where it is. You don't know where it's going, but you can have a reasonable stab at that if you've taken time working on your analysis techniques and things like that, for example. So staying fit, market fit, I think, is absolutely key. We run a trading gymnasium, which is a weekly session that we do for our clients to help them sharpen their skills to stay, as we call it, market fit. Aware of news flow, aware of when interest rate announcements are, if that's pertinent to your investment strategy, aware of announcements on a company. So, if you follow Tesla and you can see that there's quite the significant shortfall in sales and the stock that's not sold is starting to build up, that's something to look for. And if you market fit, or you've got a handful of stocks that you follow closely, you can really do that. So there's a definite parallel there. I think there's a level of instinctiveness too when it comes to investing, and I don't believe that you just have a knack for investing or you don't. It's a skill that you've had to hone. But backing yourself, and you see great examples of this in tennis when someone's really struggling and they're a great player, like a Nadal, for example. They pull out some cross-court backhand in the middle of nowhere from outside of the court for a winner, and it's a turning point in the game. If you are an NRL fan and you watch the Panthers really be on the back foot in the last grand final, all of a sudden Nathan Cleary steps up and hits a 40-20 perfectly, which totally changed the momentum in the game. It was an intuition, it was an instinct to do that, but it didn't happen by accident. There are years and years of training and practice to recognise that the Broncos were up, and that was the play, and it turned the momentum of the game around. So, in that respect, as an athlete has that intuitive feel, when you see a stock break out and you see that there's momentum behind it, you have to get on with that too, rather than, let's give it a couple of weeks to see what happens and really miss the opportunity. So in those key clutch moments of making a decision, it's being able to back yourself that it's the right decision, and that only comes if you've done the work and your focus is there and you're in touch with the market and your market fit.
Indeed, I really like that, AB. Now, if I can, before we finish off today's episode, you and I were athletes back in the day, not quite to the level of Shaquille O'Neal or
Certainly
Lance
not.
Armstrong.
I might have the same body mass as Shaquille at the moment.
Maybe. But we learnt a lot through both of our journeys.
100%.
What's one thing that you learnt out of your sporting journey that you now utilise every day at work?
Oh, there's more than one, actually. I think big one would be kick it as you want to receive it. So, treat people the way you want to be treated yourself is a huge value, and not so much in the investing space. I think that self-discipline, what it takes to do what you don't want to do because you know other people won't, that's going to give you an edge. So that might be if you've got a watch list of stocks, actually having the discipline to go through that watch list every day when other people might just do it once a week because it's a bit boring to do it every day is going to give you an edge. Classic example that this morning, it's pretty nippy down at my farm this morning. It was about 7 degrees and I went out and had my ice bath and I thought that's not going to be as toasty as I'd probably like, and it wasn't, but I feel great for it. So it's about that self-discipline, even if you don't want to do it and do the work. It's about doing that work. I think also, even if you're part of a team, which obviously as a business we are, as an individual, you have to see yourself as being a leader in your position within that team, whether that's on the footy field. Again, if it's rugby, which were both league and union, were my sports. If there's a breakdown, be there first. If there's a tackle to be made, make sure it's you. Putting pressure on a kicker, that's you. First off the line for a tackle on a penalty, that's you. And lead the team around you by doing that. And there, I think attributes from a business perspective, I think still stand true, whereby you lead by doing, not talking. It talks cheap, money buys the whiskey. Parlaying that into an investment framework, I think I was, with the money I made with sport, which was not a lot, but at the time it seemed like it was a student, is not having lifestyle inflation, which I know is one of your key ones.
Yeah.
In that, okay, you've got some extra money coming in, but that doesn't mean to say you go and blow it now. You can actually put that to good use. And if we go back to some of the more domestic sports stars that are more under the radar, that have really good savvy when it comes to the not just making the money, but making sure that they keep it. Probably two that spring to mind in rugby league would be Corey Parker at the Brisbane Broncos, former captain there, and probably Jonathan Thurston. And Corey was a builder before he was a rugby league player and still carried on building. So he and his wife, their model every 2 years was to buy a house, renovate it, and either flick it on, take the equity and move on. And as his salary increased, no lifestyle inflation, keep doing the same thing. Or if they could afford it, keep the property they'd renovated and buy the next one in order to build up their portfolio. So he's a very well-resourced property investor through leveraging off the cash flow from his football career without having lifestyle inflation, but also his natural strengths of being a builder and having a teammate and his wife that ensured that they didn't spend what had coming in the door. And Thurston's exactly the same. I mean, his wife, there's no joke, his wife gives him like an allowance of $200 a week. That's it. And so
sounds like my dad.
And he's been a pretty highly paid player through his career, and that's his pocket money. And if you know, I've had the privilege of meeting him a few times. Everything he wears is sponsored stuff, and never buys clothes. Everywhere he stays is sponsored stuff. Everything he eats, and he's just got the game down to a knack where he's barely spending the $200 a week he's getting his allowance. And again, it's enabled him to build that into a significant real estate portfolio. So life after football is very, very comfortable. And again, I think that double team of working with your partner at home can be huge. So as a little out of just my experience, but that lifestyle inflation would be one, and lead from the front, be the leader in your position for sure, whatever it might be, and back yourself. There's no point saying, shall I take the tackle or shall I run the kick down? Right, you just do it. And if it's the wrong decision after the game when you do your post-mortem, or Tuesday when it's video day or whatever it may be, or you're trading post-mortem, if it's your trading journal, you can break it apart and go, that was a shocker of a trade, what was I thinking, and go through so that you don't replicate that behavior again. Or if it was a great decision, how can you amplify that? But what about you? Because your experience in the sporting area is a lot fresher than mine.
I would say resilience for me. I struggle with a couple of things, often a lot of no's, being selected for things or awards or whatever it was, which I as an achiever wanted to have. Yeah. And number two, injuries. I was always injured, so I was always on the road to recovery, coming back to try the next thing. that served me very well for business because you don't always get a yes. More often than not, you get a no, and you've got to work past it. Most people don't survive because once they get told no, they stop. Being able to push past that, I think, and then learn from your mistakes has been a really good thing for me. Hardens you for sure.
That resilience is a huge one if we can explore that, because I think when you get a good run on, and talking to you personally, you know, you went from a great family, you went to a good university, you got a good degree, you worked hard at it, and so a lot of people would say a good school, so you've had the sort of gilded run going through. But I know a lot of the no's you've had have come from me, and that's been a good thing, because it is a test of character. And if you go back to our early days, you know, 5-6 years ago, how I would set you up with a challenge that's nigh on impossible, and you'd find a workaround because there was no option to not deliver what you said you would do. And that resilience, I think, more than that, especially in today's world where resilience is, let's call it a dying art, is huge, where people, it's just too hard, I'll give up. And it's not so much, I guess it is sport related in a way where, you know, if you're playing an 80-minute game of rugby or a 90-minute game of soccer, and even after 25 years, I still can't name how long an AFL game is, because it seems to go up or down depending on how long they want to add on for time added. But you know, and you're looking up at the clock and you think, oh, gee, there's 12 minutes to go here, and your lungs are burning, everything's hurting, but you're not going to stop because the final whistle hasn't gone, even though your body is screaming out to you that now's the time to stop. And then you kind of push past that limiting belief you put on yourself that there's nothing left in the tank, and you find more energy. And you sort of see that in the SAS selection type shows on the TV, where they go, look, most people use 40-50% of their capacity, and their resilience isn't enough to get to that next level of where it is.
Sometimes you've got to dig deep and just go past.
And look, you're going to have trades that don't work out, and they're going to test your resilience and go, well, that's it. I took 2 trades that didn't work, so investing's rubbish. Or do you look into yourself and work out why didn't those trades work out? Could be the randomness of the market working against you, and you were just in a situation that it was highly unlikely you're ever going to win ahead of a COVID correction, for example. Or was it something that you'd made a mistake that you've then picked up when you've looked at the tapes on Tuesday / gone through your journaling and seen, okay, this is what I got wrong. I didn't realise it was announcing, or I didn't see last quarter's earnings were on a decline. I should have picked that up. And you've demonstrated the resilience to look at yourself. And all of those people that we've spoken of across the board universally and have all had a challenge where it's either been an injury, or in the case of Lance Armstrong, something significantly more negative. In the case of McGregor, how does a former plumber that's unemployed, that's on benefit one week, become the highest pay per view star of a sport in a very, very short period of time? And it's that ability to take a knockback and spin it around and push it forward. And that's why these are the high echelons of sports stars that have been winners, because their mindset is that it doesn't matter what goes on, I'm going to find a way to win here. And that internal belief in themselves is priceless. And really, investing is the same. And every time you get a setback, you'll find a way to make it a learning experience that you can put into play. And if you pilot that into your investing career and avoid things like lifestyle inflation and the stuff that we talk around, I think, you know, they're lessons that we can almost certainly take. And we may not be as glorious on the field or in the ring or wherever it may be on the track.
When we talk to our kids, we are.
Oh, we're always better when you look back on back in my time.
Yeah, I should almost made it, but not quite.
Yeah, I could have been a contender. You know, you can sort of have a bit of a smirk on your face, but I know I'm eternally grateful for the lessons I learned on the sports field. And even though I played team sports and I'm in a business that's relatively solitary in terms of trading, that accountability of being part of a bigger thing, making you do the basics and go back over your mistakes, and working out that, you pushed out too wide, you're out of your channel in a football match, and you left the corridor open for them to score. You could see it on the video, and you go, make sure you don't do that again. And if you talk to each other, bounce things off you, as our clients can talk to us as a coach or a mentor and say, look, I'm doing this, what do I need to do? We can give you the value of that experience. They know, stay in your lane. There's your corridor, you got to defend, that's what you got to do. Or, you know, you missed the resistance line there, whatever it might be. Even though it's solitary, there are people around you that can most certainly help you. And look, you may not get to the stratospheric wealth of Michael Jordan or Conor McGregor, but you can get beyond what you thought you could.
Indeed. Great advice, AB. Great metaphors. Thank you very much.
My pleasure, anytime. If you want to take control of your finances or investment portfolio, make sure you visit wealthplaybook.com.au. There you'll find that you can get access to our latest best-selling book, which is full of tips, strategies, and techniques that are designed to help everyday people, perhaps just like you, learn how they can create tomorrow's wealth today. Click through to that link right now, wealthplaybook.com.au.